From the studios of Farm Journal Broadcast, this is AgDay.
Winter wheat harvest is underway in the Deep South.
The reports have been really phenomenal.
The latest from rain-soaked Louisiana. Higher interest rates remain in place. A look at what it means for commodities.
We're getting some signs, some official signs that inflation has cooled a little bit.
And everyday life on the farm.
We've at least went through 2023 and got inflation down a lot without a recession.
A deep dive in the impact right now on AgDay.
AgDay, presented by Pioneer. What's next happens when experience meets expertise. Pioneer. What's next happens here.
Good morning, I'm Tyne Morgan. Clinton Griffiths has the day off, and I'm coming to you from Ankeny, Iowa. This is the site of this year's Iowa Farm Bureau Economics Summit. Farmers and financial experts getting together here to talk about the pressures and opportunities right now in farming. Well, I was happy to host part of the summit and talk with several people, including the president and CEO of the Federal Reserve Bank of Chicago. The Federal Reserve making headlines last week, saying that while inflation has fallen further toward their target level in recent months, leaders signaling they expect to cut their benchmark interest rate just once this year. The policymakers keeping the key rate unchanged at roughly 5.3%, where it has remained since July of last year, and is now at a 23-year high. Well, I did get the chance to ask the president and CEO of the Federal Reserve Bank of Chicago a couple questions about interest rates and the impact it's having on farmers and ranchers. Goolsbee telling me the Fed is focused on what it can control. The goal is to get inflation back to 2%, and until it reaches that level, the Fed won't veer off course. During the Fed meeting last week, Goolsbee says inflation data actually came out, and it was promising for the month, showing inflation is closer to the Fed's target at least for 1 month, and that happened without a recession.
There were a lot of smart people who said it's impossible. You could never get inflation down as much as we need to get it down without having a recession. Look, knock on wood, we've at least went through 2023 and got inflation down a lot without a recession. So far in 24, there was a blip back up in inflation at the beginning of the year, and now we've got some better news. So I think we're just going to have to keep monitoring. But for sure, that should be our North Star goal is let's get back to normal without people having to suffer any more than what they have already.
Goolsbee says until 2023, inflation has never fallen as much as it did without a recession. And he says while it's not paradise in the economy, that is a success. Now, he did note that ag and manufacturing are two sectors in the U.S. economy that are more sensitive to interest rates compared to other industries. Now, Goolsbee couldn't comment on exactly how many rate cuts are likely the rest of this year, but one ag economist agrees with the signals so far that the U.S. will only see one rate cut this year. Leading into 2024, many analysts thought the U.S. would see 2 to 3 rate cuts this year, but Dan Bossy of Ag Resource Company says there will only be one rate cut, and he does not think it will happen until the end of the year.
We think there'll be a rate cut maybe in the fourth quarter. We think inflation stays stickier, and at some point, I'm not sure, don't doubt it's this year, but the Fed may have to raise its target from 2%. I think getting to 2%, that last mile, is going to be really difficult. And with that, that's the only thing propping up the U.S. dollar right now.
Bossy says Ag Resource Company is also forecasting a break in the U.S. dollar index toward the end of the year, which could mean additional rate cuts in 2025. What the Fed does with interest rates the rest of this year will impact what it costs farmers to borrow money. However, it could also impact the market. AgDay's Michelle Rook joins us with that part of the story. And Michelle, what would a cut in interest rates mean for commodities?
A lower interest rate environment moving forward could continue to push money into outside markets like the stock market, which is already making new highs. And that can sometimes mean less speculative dollars coming into the commodities sector. But that's not always the case when it comes to agriculture. Inflation looks like it may be cooling when you look at last week's consumer price index, which was at only 3.3% annualized. So will that and ideas of interest rate cuts by the end of the year keep money going into the equities and outside markets and away from ag commodities, specifically grain?
I don't think grains are a great inflation read because, commodity markets have varying degrees of elastic demand and inelastic demand. And, quite honestly, folks around the world need to eat. And so there's always that underpinning of support, for global grain.
He says other outside and soft markets are providing mixed signals about inflation. The energy markets have been flat, while inflationary buying has continued in metals such as gold and copper.
And then we've got copper, which is another economic indicator, and silver, which is kind of a hybrid of the two. And also, looking at crude oil hasn't done anything despite all of the bullish headlines that have been thrown at it. The West Texas Intermediate market's still just sitting there. It hasn't done anything for the last number of months.
The dollar index is relatively high, but if inflation continues to ease, that could also devalue the dollar, making U.S. goods more competitive in the export market and spurring demand. I'm Michelle Rook reporting for AgDay.
Thanks, Michelle. Well, if it's not finances, it's the weather that's top of mind for farmers right now. And we have a new meteorologist helping to keep us informed. We'd like to welcome Jack Van Meter. Jack, it was a rainy weekend across the Midwest.
Yeah, it was a pretty rainy weekend in the Midwest, but unfortunately it looks like it's the only time that's going to do that for the next week or so. Flooding potential for Monday. We can see parts of Minnesota actually in that 15 to 40% chance of a flood, especially around lakes or rivers there. Now that temperature outlook is the reason for that. We have a ridge of high pressure that's going to be affecting much of the eastern part of the country. Lots of 90 degrees are going to be expected through much of the East Coast. A little cooler out west, but still pretty hot compared to normal. So do be prepared for that upcoming this week. Take a look at this little cutie in the strawberry patch. Susanna, who took this picture near Milwaukee, Wisconsin, Susanna tells us that little Jane, who's pictured in the picture, loves strawberries, and it definitely shows. I'd be using the same face that she is too. I'll have more of your forecast coming up.
Well, Tyson Foods has suspended its chief financial officer after he was arrested on charges of driving while intoxicated and careless driving. 34-year-old John Tyson was arrested last Thursday by University of Arkansas police in Fayetteville. He was released 9 hours later on bond. Reuters reports a police corporal saw Tyson driving his SUV partially on a curb and grass while making an improper turn. A police report says Tyson's blood alcohol tested at more than twice the legal limit. You'll remember in November 2022, Tyson was arrested for criminal trespassing and public intoxication after a Fayetteville resident said she came home to find Tyson, who she did not know, asleep in her bed. Tyson is the great-grandson of the company's founder, John W. Tyson. The company has named Kurt Calloway, a senior finance executive with the company, to take over as interim CFO. Well, the new fertilizer plant has opened right here in Iowa. The $15 million, 75,000 square foot fertilizer facility is owned by Landis Cooperative. It aims to lower costs for local farmers, reduce greenhouse gas emissions, and support local businesses. The facility's construction was partially funded by a $5 million grant from USDA as part of federal initiative to expand domestic fertilizer production. Besides producing fertilizer, the facility will create adjuvants and soil products and store millions of bushels of corn, other grains, as well as soybeans. Well, grains fought to get into the green on Friday. We'll look ahead at this week coming up, and later, wheat harvest starts to roll in Louisiana. We'll check in on this year's crop in the country.
Introducing Unscripted with Tyne Morgan and Clinton Griffiths. Real, raw, and entertaining. A new episode is available every Friday on Farm Journal's YouTube channel or wherever you get your podcasts.
Well, following a 17-year legal battle, U.S. banana giant Chiquita Brands International has been found liable after being accused of financing a Colombian paramilitary group. Now it's been ordered to pay over $38 million to the families of 8 victims. The ruling coming from a Florida federal court. It found the company liable for financing a Colombia right-wing paramilitary group that it's reported committed extensive human rights violations over 20 years ago. It's a group to the U.S. declared a foreign terrorist organization in 2001. The company says it will appeal the ruling and says it had been a victim of extortion by the group in order to protect the company's workers in Colombia. Grains under pressure to end last week after being really on a roller coaster ride following the release of USDA's latest supply and demand report. Michelle Rook is back with a look ahead to this week in markets now.
Grains closing out the week lower. Chuck Shelby is back with us. And Chuck, let's talk about the sell-off in the greens on Friday first. You know, we did run up into some resistance areas on corn and soybeans. So was some of it just some profit taking?
I think last week was pretty good up moves at times. So I think those traders took their profits, got out of the way. You know, as we move into this new week, what's the weather forecast going to be? We're kind of in the weather market, and with high temperatures coming, we'll see how the traders react this coming week.
Yeah, so if the forecast going ahead continues to look kind of hot and dry into June into July, could this market go back and take out those resistance areas we've been hitting our head on, you think, in row crops?
Well, I think we have a lot of information coming towards the end of June. We have the acreage report that's going to be really important. We've also got this ring of fire pattern going on. Does that ridge move back to the west? Does it allow rain into the east? The temperatures cool off. So I think we've still got enough weather ahead of us that this market is going to be sensitive as we move to the end of the month and into the first week or so of July.
Yeah, we didn't mention the fact that we're going into delivery period here pretty soon. Are we going to see the debacle that we saw the end of February going into March or not?
Not as bad. I think a lot of producers have cashed in on some of the rallies we've had.
You bet. Now, the wheat market obviously has been seeing some harvest pressure. Do you expect that to continue this week, especially till we get at least past the halfway mark?
Yeah, wheat harvest is really just started here in the east. So far, the yield reports have been pretty good. But as we move through harvest, I think it might take towards the end of the month where we really, get past 50% and say harvest pressure is passed in these markets in wheat.
And then do we go back and focus on Russia, Black Sea problems? What?
That was one supporting thing from the USDA report. They did lower the Russian crop and they lowered the Ukrainian crop. So I think we would probably be worthy of reownership here as once we get past harvest. We're looking forward. I think there'll be more demand come to the United States as we get past harvest and move into the summer and early winter.
Thanks for joining us, Chuck Shelby, Risk Management Commodities. We'll have more Ag Day coming up.
Watch Markets Now with Michelle Rook on the Farm Journal YouTube channel, keeping you updated throughout the day on the markets at the open, midday, and close. Find out what moved the markets today and what to expect the market to do next.
Again, just looking forward to this week. It's just going to be an absolute scorcher out. Look at this. This is our temperature outlook, and we can see for much of the eastern part of the country, especially parts of the Midwest, they're not going to be used to those over 90-degree temperatures, close to even 100 degrees, especially today and tomorrow on Tuesday. Going to be very, very hot. Looking out west, though, still going to be warm, but not that oppressively hot. As we can see, much of this above normal heat wave is going to be out west. And as we look at our precipitation outlook as well, we can see much of the same story. It's all going to be because this high pressure sets up down in the southern states, really forcing up those heights, really bringing in those dry conditions as well. We can see about normal precipitation just as all of that energy has to go right over the high pressure ridge there. But in Minneapolis, in Minnesota, they're going to be seeing a little bit of precipitation, especially coming out of this weekend. Four Corners State's also getting some relief, very good, because especially New Mexico has been quite dry. Precipitation forecast for this upcoming week. Again, Minnesota is going to be our soaker event. Look at that. A lot of rainfall going down there, especially a lot of rainfall too going down south. Louisiana, all across the Gulf of Mexico, especially on Texas, a little bit on the Del Rio River too, down in Texas. Going to be seeing a decent bit of moisture. Unfortunately, where that high pressure is setting up, not going to be seeing a ton. Drought monitor still needs to be updated this upcoming Thursday here. We still see that we are in some extreme to exceptional drought out in New Mexico. As we pivot out to Florida, though, we can see that this is just a little outdated. We're expecting that to go away with all that excessive rainfall that they have been seeing this past week. They saw a ton of rain. Mason City, Iowa, pretty hot, 89 degrees, 60 degrees, mostly sunny conditions. Childress, Texas, again, pretty hot as well, 90 degrees, 73 degrees under partly cloudy skies. Utica, New York, 95, 72.
Well, it's not just used equipment that you may see better prices for these days. Machinery Pete tells us what he's seen when it comes to new equipment at auction. That's next. Well, Kloss is celebrating 500,000 combine harvesters built since 1936. In celebration, it's producing several anniversary machines for several of its lines. 2 of those machines will roll off the production line in Omaha, Nebraska, and they're heading to farms in the U.S. and Canada. The company says to look for the specially designed machines on display at upcoming trade shows and field days over the coming weeks. And it appears more late model ag equipment is making it to the auction block these days. Machinery Pete has a look at the numbers.
Well, no doubt a lot of belt tightening going on across farm country here in 2024, folks, with more profit pressure. And of course, we're seeing, not surprisingly, sales of new high horse tractors drop off here in 24. But I got to tell you, what we've been seeing on the auction market, at least so far, on the high horse tractor front has been stronger than I think most people would have expected. Now, let me share an example here, a specific example. A John Deere 8R370. I've seen 5 sold at auction just in the last 2 weeks. Dealers are beginning to push more of their excess inventory out to the auction market, and I've seen 28 sold so far this year. And up to now, the average auction price this year on an 8R370 stands at $344,750. That's only down 3.2%, which I think is quite a bit less than most people assume. Similarly, on the John Deere 8R310s, average auction price only down 2.7% this year. And then as you drop into the smaller horsepower category, into that mid-horse range, John Deere 8R280, actually average auction price up 4.8% so far this year to $273,094. Now, one metric I've been tracking very closely for 25 years, folks, I call it our Machinery Pete ratio. It's pretty simple. It's the average auction price on an item divided by the average dealer advertised price on that same item. And over the 25 years, I found 71 to 76% is kind of the normal stable average. Now back to our 8R370 example, the current Machinery Pete ratio on that is 80% because the average or the current average dealer ad price is just over $445,000. Now where I am seeing a much bigger gap is with used combines. So a John Deere S780, for example, the Machinery Pete ratio currently is 61.6%, and a Case IH 9250 combine, current Machinery Pete ratio is 59%. So a lot bigger gap there. Now I will say I think we're going to see a lot more high horse late model tractors hit the auction market here the second half of the summer into fall of 24. So it's going to be interesting to see what happens.
Thanks, Greg. Well, winter wheat harvest is now underway. We'll check in on the harvest in Louisiana as farmers dodge thunderstorms in the country.
Introducing Grow Getters with Davis Michelson, a podcast that shines light on agriculture's most innovative side hustles. Find the latest episodes on Farm Journal's YouTube channel or wherever you get your podcasts.
It's not the crop it once was in Louisiana, but there are still a few farmers who enjoy growing wheat. As LSU Ag Center correspondent Craig Gautreaux reports, farmers are now harvesting this year's crop, and the early returns are good.
Dodging afternoon thunderstorms has been a common occurrence for Louisiana wheat farmers as they try to harvest this year's crop. For those who have been able to get into their fields, the yields have been very good.
The reports have been really phenomenal. Some growers were reporting 75 to 85 bushels. Test weights seem to be off a little bit, but we're off to a pretty good start.
One plus for producers this year has been an increase in the price of wheat.
It's hovering around $7. Checked back in March, it was hovering around $5, so a substantial increase in price.
Some farmers will plant soybeans immediately behind their wheat crop as part of a rotation. But some farmers claim there is a yield drag on those late planted beans.
What growers don't like about that rotation is that you have to plant your beans a little later than you would normally do it, and you speak to some and they say there's a yield penalty because you plant late.
Not too long ago, Louisiana had nearly 300,000 acres of wheat, but that number has shrunk significantly. Paget is hopeful that good returns on this year's crop will encourage others to grow it.
The potential for next year, who's to say, but I think we're certainly headed in a positive direction for increased acreage.
Some farmers may bale the leftover straw to be used in place of hay or for erosion control projects. With the LSU Ag Center, this is Craig Gotro reporting.
Thanks, Craig. Well, that's all the time we have this morning. Thank you for watching. For all of us at AgDay, I'm Tyne Morgan. Have a great day in Farm Country.